He's one of the most successful investors ever. Frank Giustra is the founder of several major mining companies and Lionsgate, one of the best-known Hollywood studios. Renowned for timing markets, Giustra believes the world is about to go through a dramatic change. What you're about to see are the highlights of conversations I had with Frank taped over a couple of days early this summer. He describes a gathering storm for investors, the possible outcomes, and Aris Gold, the ark he is building with his own money to ride out the storm. This is perspective helping everyone watching this today. That's why I really believe this is one of the most important interviews I've ever done. The first thing he wanted to show me,
I want to show you something really cool here.
This 500-year-old trunk owned by Spanish conquistador Francisco Pizarro.
I keep this for a very, very important reason. It has two very valuable lessons about gold. The Spanish Empire was basically built on the conquest of the Incas. All the gold that came from South America was what made the Spanish Empire in the 16th century. It shows the importance of gold in the system. So that's one valuable lesson. On the other, the flip side is, if you think about it from the perspective of the moral of the story of the Treasure of the Sierra Madre, that movie, which is how greed brings on the demise of men.
These are the men who tried to tap the treasure of the Sierra Madre. Men with an oath on their lips and muscles in their arms, but men with greed in their hearts, ready to break their backs, to sell their very souls for gold, fighting shoulder to shoulder against the forces of nature, only to find their greatest enemy is human nature.
Shut your trap! Shut up or I'll smash your head flat!
Pizarro died a very ugly death because he got into a conflict with one of his cohorts that was with him when they conquered the Incas. They had this big feud, and he eventually was assassinated about 4 or 5 years after he conquered the Incas. So gold is something that everyone should own as a preservation of wealth, but not as an ambition, something to go after to become rich, because that's, leads to that whole greedy aspect of human nature, which I think is a very ugly thing.
Yeah, I know what gold does to men's souls. As long as there's no find, the noble brotherhood will last. But when the piles of gold begin to grow, that's when the trouble starts.
It's a fascinating story, how Francisco Pizarro basically fooled Emperor Atahualpa into believing that he had a lot more men. And I think he only had like 100 or 150 men, he basically took down his entire army. Mind you, they had guns and horses, which the Incas didn't have. But he tricked them, took them hostage, and then held them hostage until the emperor's men would take the soldiers, the conquistadors, to where all the gold was. This, the famed city of El Dorado, which was Cusco. And basically they came back with what was then an unheard amount of gold. It filled half a room. It was so much gold. And Europe had never seen that much gold, and that's really, again, what made the Spanish Empire.
And it would have been, the best stuff would have been right in there.
Well, that was his personal trunk, so I'm not sure if he held gold in there or underwear.
It's a better story with gold.
Much better story, but this is a great reminder about, a historical reminder about what role gold played in history.
Frank's personal connection to gold and the underlying problem it solves, preserving wealth, didn't start with Pizarro's trunk, founding Goldcorp, or his earlier business successes. It came from his childhood and a story he has never shared publicly until now.
I came from a very lower income class. My father was an immigrant to Canada and worked in the mines. He came to Canada at the age of 19 and with very little education and no money, and ended up working as a driller and a blaster in mines around Canada for many, many years. It came to a point where he had to make a decision because he was going to be working way up north in a camp, and obviously we, the family, had 4 kids, couldn't be living up in a camp. So he sent us to Argentina, where my mother's side of the family mostly resided. They lived in Buenos Aires. So he thought that she'd be safer, more comfortable around her family. And then he decided that, well, Argentina's not a bad place. So he started to invest in a couple of businesses down there, and thinking that he would get out of the mining hard work, hard labor, and work his way into a couple businesses. Well, that didn't go very well. Argentina was starting to fall apart, and he could see the writing on the wall that it was, the whole Peronist movement, had really messed up the country. In 1965, when I was 9, he basically said, I got to get you guys out of here. And he moved us back to Canada. He had finally made enough money to move us back to Canada. And then he tried to sell his businesses down there, got into a long problem with a number of partners and didn't get his money out in time. By the time he got his money, hyperinflation had set in and destroyed it like it was worthless because it was Argentine pesos. And he was broke. He'd lost everything to hyperinflation. And that was a really valuable lesson, to see hyperinflation really affect you personally.
After your family escaped Argentina or left Argentina, you ended up on a small island in BC where your dad was working at a mine, is that right? And describe your living situation after that hyperinflation experience.
We were broke. He could only afford, he bought a small lot and bought a trailer. We lived in a trailer that was 32 feet long and I think about 12 or 15 feet wide. And there were 4 kids and two parents there in that very, very small trailer. Because my father didn't believe in borrowing money. So he believed that if you wanted to buy a house, you'd have to pay for it in cash. And it took him a number of years, 5-6 years before he could buy a house. And so we lived on this small island where there was this iron ore mine that my father worked in. And for a 9-year-old, it was like Huckleberry Finn. We were out in the woods all day, playing in the lakes and the ocean. It was great for me, but he was having a tough time. And people that don't believe that it's possible in America or Europe, well, Germany had it in the 20s. Turkey is in it now at the moment. It can happen, and it's always caused by the same thing: the printing of too much money. Eventually, you will get hyperinflation, and hyperinflation happens when the citizens of a country lose faith in their currency and they are rushing to get rid of that currency as quickly as possible to anything that's tangible. That's when it becomes a self-fulfilling prophecy. It becomes a spiral, wages chasing prices and so forth, and at a very rapid rate. Because it's all about confidence, and this is what I was talking about earlier about in the last 10 years you hadn't seen the velocity of money pick up. You had all this money printed, but the velocity of money wasn't there because people weren't spending and lending and borrowing, all the things that are necessary for money velocity. That will pick up, and it'll pick up when inflation expectations become unanchored, which is the term that the Fed uses. They anchor your expectations, make you believe that it's low. And in fact, it never has been low. Inflation, CPI is manipulated such that it's whatever they report, inflation numbers are double that. And I wrote an article about this recently about how the CPI is manipulated, how it was not the same CPI calculation they used in the 1980s. They've changed it 30 times. And if you try and decipher how they calculate inflation and how the little tricks they use, it's so confusing. You need a PhD in math. And it's all for the purpose of obscuring what real inflation is. Because if people really knew that inflation today, let's say, has been around 8%, is really 16%, if you really measure true inflation, people would freak out. And obviously it would impact a lot of things, all the indexing for the pension fund, Social Security. It would obviously mean that rates would have to go up and that would implode the economy. And so they're in a box. And I said this 10 years ago. I said the Fed created an inescapable trap. And they're in this box and they know it and they can't get out of it. So it's like, anybody that believes that the Fed is there to protect public interest is sorely mistaken. They're a cartel. The Fed is a cartel with government backing. And if they have losses, they transfer those losses to the taxpayer. It's like they're like trust fund babies, where they can go out and be as reckless as they want because they know daddy's there to protect them. That's the analogy. But once inflation expectations get unanchored and people start to lose confidence that inflation is going to be subdued or brought back, reined in, that's when it starts to feed upon itself. And you're starting to see that now. You saw it initially because of the supply chain issues that were caused by COVID, and that caused the cost of goods coming in from around the world to go up. And now you're seeing it since the Ukraine war. Now things like food prices and energy prices are going up because there's been a huge disruption in that, because a lot of it comes from Russia, whether it's fertilizers, whether it's wheat, or whether it's oil. So food and energy are your two biggest components of the CPI. So, and there's nothing the Fed can do about the supply side. You know, the Fed can only address demand by raising rates. And the supply side's out of control right now, and I think that that's going to continue to fuel inflation at the CPI level for a number of years here. This is not going to go away anytime soon.
What do you think is going to happen to the standard of living in the West, particularly US and Canada?
I think it's going to go down because the inflation is here to stay. There's only so much the Fed can do. They can't raise rates beyond, you know, I mean, look at all the hand-wringing that's taking place and how the market's tumbled in the last little while. There's too much debt in the system. When the 2008 crisis happened, and I predicted that there was going to be money printing, and then they did print money, when Bernanke said at the time, oh, we're going to be able to normalize rates, and we're going to be able to unwind the balance sheet of all that money that was printed, I called BS on that, and I said, you can't, because you'll implode the entire system. So what's happened since? Debt has doubled in the last 10 years. Global debt is at $300 trillion. It's in most developed countries, all debt, which is household debt, corporate debt, and government debt, is equal to 250% of GDP. That's insane. You raise rates in that environment on a global basis, you'll implode the whole system. They know this. So they can talk a lot about raising rates, and they can make a lot of threats about unwinding the balance sheet. None of it's going to happen. They're going to hit a wall. Stock markets will continue to crash. The bond markets will crash. And there will be some sort of a credit crisis, some sort of a crisis. And the Fed, which has no tolerance for recessions, never mind, you know, a financial collapse, they're gonna back off. And what I believe is that you're going to have to put up with the type of stagflation we had in the 1970s, where you have high inflation, low growth or no growth, and we're just going to have to get accustomed to it. So when you talk about the standard of living, it's going down for most people. The rich will get richer, but for most people, it's going to be a very, very difficult time.
We've had this incredible speculative culture in the last decades. In a recent interview, you said this is not the time for speculation. Mm-hmm. So in your mind, this is not the time to be greedy, but the time to be defensive. And so how does one protect their wealth in an environment like stagflation?
So you have to be diversified, skewed towards hard assets. Okay, so what does that mean? Diversification in terms of a little bit of cash. You always need cash. As terrible as cash is, because it's going to be eaten away by inflation, you have to have some, because asset prices are probably going to go a lot lower in certain sectors, and you want to have some cash available for that. Definitely gold, because gold is, even if gold doesn't go up in an environment like this, which it's not at the moment, it doesn't go down. So its relative performance to other asset classes as a preservation of wealth is still solid. Okay, it might go down a couple percent, but it's certainly not going down like 25, 30% like the NASDAQ's going down. That's, or like cryptocurrencies, which are down over 50%. So you have to have your gold as your preservation of wealth. And I'm talking about physical gold, okay? If you want to play the paper gold market, which is a completely different thing, and never fool yourself into believing that the paper gold market represents gold, because it doesn't. Okay, it's so manipulated. There's so many claims on a single ounce. Probably there's 100 claims on a single ounce of gold because of the way they use derivatives and the way they sell the futures. So physical gold is something that you have to own. And then I would own real estate. I would own certain stocks in certain sectors.
Why is the dollar so strong?
Because in the initial stages of a panic, much the same as what happened back in 2008, people panic, they sell all assets, including gold. And so what happens? All of that cash goes into US dollar treasuries, and that lifts the dollar price against all other currencies, and you're seeing that right now. And when the dollar goes up, traditionally, gold goes down. So gold's under a little bit of pressure right now until the dust settles and people start to go, okay, we don't want to stay in dollars because of inflation now. We have to reroute that money somewhere else. And that's when you'll see, I think, a lot of that money going into gold, because people see it, okay, at least I don't know what's going to happen here. I don't want to lose my money. Rule number one, don't lose money. Rule number two, pay attention to rule number one. And that should be the mentality at the moment, because you don't know which way this is going to play out.
So standard of living is going down, conflict is on the rise, and there's a potential monetary reset on the horizon. What would, is there any better advice than to tighten your own belt at home and conserve the capital you have and tone down that lifestyle that's got excessive and decadent in the West?
Yeah, really excessive. I mean, it's a casino mentality that's taken over the West, specifically in North America. And this is going to end very, very badly, and it's already started. You're seeing the sort of unraveling of all of these crazy spec bets, whether it's high-tech stocks or whether it's cryptocurrencies, NFTs, the real estate on the meta universe, and the metaverse. It's all of this craziness, these valuations. That's popped, in my opinion. It's popped. Now you're going to see an unraveling like you saw in the dot-com unraveling back in 2000, and it's going to take down every market with it, and people are going to rush to cash as they panic, and then they're going to have to come back and sort out where they're going to put that cash.
Like a generation ago when I was growing up, we had hand-me-down clothes and used golf clubs and old cars, it seemed like. And now everybody's got the fanciest new stuff and the newest cars and the most expensive clothes and the bottles at the nightclub. And I just feel like we're all living like the good times are going to go on forever.
It's 1929.
Yeah.
It's 1929. They were partying like crazy in 1929 until it all ended very suddenly. And I think that's potentially could happen here.
I think gold stocks did incredibly well during the 1930s. So.
Absolutely, they did well, because they had to revalue the price of gold.
When I was a young man, I came across your articles that you were publishing in the early 2000s. Tarnished dollar will put a shine on gold and others. And can you just tell me how you picked the bottom in the gold market at that time and what you did about it?
It was pretty serendipitous, because I was living, I just stepped down as the CEO of Lionsgate, which I'd run for 3-4 years.
That's the film company, yeah.
Of the film company, Lionsgate Entertainment. And I just became chairman only in 2001. And my wife and I and my small child at the time had moved to New York for 6 months, and I was bored. So what did I do? I just started reading. I would stay in my pajamas all day until we had to go out at night, but I'd stay in my pajamas and read about economic history, financial history, about the gold business, and a lot about the rise and fall of great powers. And I was fascinated by the likes of the Roman Empire, the Spanish Empire, the British Empire, and what caused all of these great powers to rise and then fall. And you could see the patterns are all very similar. And I'm not obviously the first person to notice this, a lot of people know this, but I started to think about where the US was at and how the Fed was starting to change its behavior to become more accommodative. Every time there was a financial crisis, they would, it was Alan Greenspan in those days, and he would come to the rescue and lower rates, and and I was going, okay. And then he became the darling of Wall Street. He was called the maestro, and and I think that inflated his ego, and then he decided to please Wall Street all along the way. And then when 9/11 happened, that changed the whole world. And then I saw both the administration, which was the Bush administration at the time, and the Fed do things that were clear to me were going to destroy the value of the dollar. And
very similar to the 1960s war in Vietnam.
Exactly.
Destroyed the dollar.
They lowered taxes. They went to war, and Bush urged consumers to go out and spend. So everybody, the debt went up, the rates went down to zero, and from that moment on, from 2000 on, I knew the game would never change, that they would continue to come back to this easy money policy because they were putting themselves in a trap. And so that's when I first started writing about, the fact that gold, which was $250 an ounce at that time, I'd say, gold has an inverse relationship with the dollar. Sell your dollars, buy gold. And that was my whole thesis. And
what did people think about that thesis at the time?
No one believed it at the time. It was so funny because I was trying to test my theory, because I published the articles, and then I did with my own money what I suggested in the article. I sold U.S. dollars and bought gold, and then I thought, well, what else can I do here? And I thought I got to find a way to put this thesis to work to actually do something interesting. Again, I was bored. I was retired, and I wanted something else to do. And so Frank Holmes, who was a good friend of mine and was he's the owner of U.S. Global Services, which had a big gold fund that performed very well. He was always a great stock picker. I sold him on my gold idea, and then we went on the road to test the thesis. And we did presentations to institutional investors. We weren't selling any product. We were just selling an idea. And I remember getting kind of laughed at. A lot of people, no one believed us. They were going, what are you talking about? Gold's dead. And I said, but this is the reason why it's going to go up. And, and they kind of mocked us, most of them, very few listened. But I wasn't discouraged because I had a lot of conviction about what I believed that this was going to happen. So I thought, okay, never mind, we'll convince them later. And then we came back to them later when we had something to sell.
Frank did come up with something to sell in 2001. He partnered with legendary gold CEO Ian Telfer, who you'll meet shortly, to launch Wheaton River Minerals, which became one of the most successful gold mining companies ever.
So Ian and yourself go out and take over Wheaton River Minerals, which at the time had $20 million in cash, and you guys, I believe, put a $5 million placement into it. So you started with a $25 million cash vehicle in 2001, and I believe within something like 40 months, it had 20 mines and a $5 billion market cap, and 10 years after inception was a $50 billion company, the largest market cap gold producer in the world. It's absolutely incredible to me how quickly the rise of Wheaton River, which became Goldcorp, happened in contrast with the Newmonts and the Barracks and Placer Domes, which took place over many generations to be built up into that speed. So I just want you to describe, if you can, how did events conspire to allow Wheaton River to be so successful so quickly, and what was the story from your perspective? How did that happen?
I think the biggest thing that helped us was the lack of interest in the sector, because people weren't doing anything. They weren't investing. Gold was dead. People didn't believe that gold was going to go up again. So there were lots of opportunities out there for someone that had a different view and was going to be more aggressive. And that was my whole thing, was like, we have to aggressively build this mining company in a very short period of time, because the gold price is going to go up. And when the gold price eventually does go up, we're going to have a lot of competition. So I think we were first out of the gate, even when no one believed us. And we had to make it work, so we started to look for acquisitions when the gold price was still subdued. I think that gave us a lot of advantage, that we moved quickly, we were aggressive, and we were believers in the gold price. Because you had to believe, with some of the acquisitions that we made, you had to believe that the gold price was going higher. We were buying great assets, but we were slightly overpaying for them, according to our peers. They were going, oh, you're overpaid for that. We're going, yeah, you might think that right now, but they're great assets, and as the gold price goes up, we're going to look very, very intelligent, and that's exactly what happened. And we moved very, very quickly, and did a number of acquisitions, and then we just did some mergers, and by the time it was all said and done, like you said, in 2010 or 11, it reached $50 billion in market cap.
Did you ever expect it to be that successful?
No. My goal was to build a 1 million ounce a year producer, to get to 1 million ounces a year, and I thought, if you can get to 1 million ounces a year, now you're an institutional quality stock, and you're going to be re-rated. You're going to be in the indexes and all those things, and that was the plan. Well, we far, went beyond that, and things just happened, and it got a lot bigger than I thought it would. Ian Telfer.
As mentioned earlier, Frank's partner when he launched Wheaton River was this man.
Please welcome Ian Telfer to the stage.
Ian spent his career working with some of the most dynamic entrepreneurs in mining history. Rob McEwen, Ike Batista, Robert Friedland, and Frank.
Basically, being an entrepreneur is trying to do something that everyone tells you can't do.
He has created literally tens of billions of dollars worth of value for investors over a 5-decade career. Today, Ian is the independent chair of Aris Gold, a company that's operating under the same template that made Goldcorp so successful. Frank is a strategic advisor and major shareholder of the firm.
What did you learn from Frank, Ian?
Oh, one thing, I've worked with a number of entrepreneurs and successful entrepreneurs, and the one characteristic they all have is they have no self-doubt. And Frank is like that. When the gold price was at $250, and we were both out of the gold mining business when we started Wheaton River, Frank knew gold was going to go up. He didn't just think it was going to go up or hope it would go up. He knew it was going to go up. And so that's, I'm an accountant. People say, what could go wrong? I go, well, this could go wrong, interest rates, gold price. You ask an entrepreneur like Frank, what could go wrong? And they go, nothing. And that's what I learned from Frank.
What about you? What did you learn from Ian?
Oh, just the art of presenting a story so that it's appealing. I said earlier, he's one of the greatest presenters I've ever known. He has that unique dual talent, a great executive and a great presenter promoter. And I watched Ian present, and it's like, it's beautiful to watch. You're convinced. He knows how to nail the points that will, as Robert Friedland used to say, create that hand-to-wallet reflex. Right. And very good at it. And I've always learned from other people throughout my whole life. And you get little tidbits from certain people. And with Ian, it was just his ability to just tell a story and present it in a way that makes it appealing.
So Neil Whittier was the founding director of Wheaton River, and he's the CEO of Aris. And Ian, you're the chairman. Frank, you're a special advisor and a large shareholder. What are the parallels that you see, Ian, between the early days of Wheaton River and Aris? And what do you think about the opportunity in front of Neil and Aris?
I guess the parallels is that I think all of us at Aris see an opportunity to create another major gold mining company. And as a lot of people have tried to do it, it's very hard to do. But a group of us have had success before, and we see with the assets that Aris is putting together now and a few more that we've got our eyes on, that we're going to be able to do it again and have a major gold producer in the market, and we think the market will look forward to it. One of my criticisms of the current gold space is there's too many mid-sized companies, and investors are looking for a large company. So we're going to build them another large company.
The three of us chatted for a long time about what made Wheaton River and ultimately Goldcorp so successful, and why Aris Gold is potentially tracking the same way Wheaton River did. Then it was back to Frank to zero in on what he sees for the future of the global monetary system.
Could you tell me your thesis for a monetary reset, a global reset?
Yeah, no. So I've been obviously watching, the developments of the global financial system for many, many years. There are a few trends that I've kept my eye on, and one is that for many, many years, physical gold, has been moving east. So, and while we were in North America binging on digital assets and speculating on all sorts of things, since 2010, central banks around the world have been accumulating gold at a feverish pace, and they're still doing it, 12 years later. A lot of that gold ended up in Russia and China. Now, Russia has been very overt about its gold purchases. It's very transparent, and it's got the largest percentage of reserves in gold than any other country. China, on the other hand, is a little bit less transparent, and they report gold their gold reserves every number of years. Then they stop reporting for years, and when they do report again, the gold reserves go up exponentially. They haven't reported since 2019, where they reported 2,000 tons. But the way I see it is that China is the largest gold producer in the world and has been since 2007. China is the largest gold importer in the world. No gold leaves China. Mine gold in China, you cannot export it. So it's like a big black hole where the gold goes in and never comes out. And so my guess is that the next time that China reports its gold reserve, they're going to be a lot larger than anybody expects. And if you think about it in just the numbers, they've mined 7,000 tons just out of China since 2007. And what about all the gold they've imported? They're the largest importer, and obviously some of it does go to private citizens, but my guess is that they're preparing themselves, as Russia is, to exit the US dollar system. Why? Because of sanctions, and because they've seen how the US dollar has been weaponized, and you've seen what that's done to Russia. You know, they've basically frozen all their dollar reserves. So I think what's going to happen is China is obviously watching all this very, very carefully, and I think that given that at least those two countries and several others, you know, Iran and others, want to get out of the US dollar system, I think gold will have to play a role in that. And I think that that's what we're going to find down the road at some point. They're going to announce some system, and we're going to have a bifurcated world. Two systems. You're going to have the US dollar system, which a lot of countries can continue to trade through the US dollar system. And then you're going to have another system, and it might be two countries, China and Russia, both with partially backed gold currencies. And I think that that's where the world is heading, because many countries around the world don't want to be hostage to the US dollar system. Not just the adversaries, almost everybody else. So I think it might be kicked off by Russia and China, or Russia or China, or both. And then the world has a choice to trade either within that system, because they can trade in that system, they can also trade in the US dollar system. They don't have to align solely with one. And if you think back what happened after the Ukraine war, when the US was looking to condemn Russia at the UN, about 80% of the world's population sat on the sidelines, not wanting to upset their relationship with Russia. So I can see a world where you have two systems. And it might happen soon, it might happen later, but eventually we're going to have, I think, a system where gold plays a role. It might not play the entire role. There may be other commodities mix in there, but there will be a currency that's backed with something tangible, because none of the fiat currencies are trustworthy anymore. They've printed too much of it.
You mentioned the Spanish Empire, and the Spanish Empire and the Dutch Empire and the British Empire and the American Empire. As the currencies have risen and fallen, the one constant has been gold. And I think it's hard to recognize that in a short or medium term of our lifetimes, but you know, throughout the centuries, that constant has been gold.
Say, answer me this, will you? Why is gold worth some $20 an ounce?
I don't know, because it's scarce.
1,000 men say go searching for gold. After 6 months, one of them's lucky. 1 out of the 1,000. His find represents not only his own labor, but that of 999 others to boot. That's 6,000 months or 500 years, scrabbling over mountains, going hungry and thirsty. An ounce of gold, mister, is worth what it is because of the human labor that went into the finding and the getting of it.
Do you not think that something has changed in the last century, where with the advent of technology and the internet, that gold is no longer relevant?
No, I don't believe that, because gold is the only constant that no one else can print. And I think that the temptation for all countries, if they have the ability to do it, is to print money. It's happened throughout the centuries. Anytime you've had a paper currency, it gets destroyed. And gold is the only thing that people revert to. Now, if you go to a digital currency, which has been talked about by many countries, how is that different? You know, if a central bank issues a digital currency, it doesn't make it any more scarce. You know, they
might buy some time.
Yeah, they could create a cap, put a cap on it for a period of time, but they can easily change their minds, just like they took the dollar off the gold standard. You can take digital currency off a scarcity standard. Gold, you cannot print. There's only so much of it, and it grows by 1.5% a year. You know, that's the inflation of gold from gold production. And every central bank in the world owns it, except for Canada and maybe the UK, and they're buying it every year. So why are they buying so much gold? They're de-dollarizing, number one. And I think countries like China and Russia, especially Russia, were preparing for some confrontation with the West, and that in preparation they bought a lot of gold and they'd sold their US dollars. And I think China's doing the same thing.
What does a monetary reset mean for the average person?
Well, I think what the average person has to be very careful about is if you think back to the Depression, when Roosevelt basically outlawed private ownership of gold. The government wanted the gold. They didn't want the citizens to have the gold, so they basically made it a law that all citizens had to turn in their gold for US dollars at, I think at $27 per ounce. Once they got everybody's gold, they revalued the dollar, basically devalued the dollar to $35 overnight. So they basically ripped off their own citizens. And then they made it illegal for people to own gold. And in a more recent case is if you think of Turkey in the last couple of years, which has had an incredible run of inflation, the government was begging the Turkish population to turn in their gold for lira. And why would you do that? You know, with 70% a year inflation, where the currency drops by 50% against the US dollar. So the lesson learned is if you believe there's going to be a monetary reset, keep your gold. Don't let them talk you out of selling it, which they're trying to disparage gold, and they have for the last number of many years. They're trying to say gold is, you know, a barbaric relic and all these things. They're trying. In the meantime, they own it and they buy more of it, but they don't want you to own it. So I think to protect yourself, own some physical gold.
What about government outlawing gold ownership again? Is that possible in a monetary reset like you're talking about?
I think it's very difficult in today's world, given the interconnectedness of today's world, but I think it's certainly possible. And so the question is, you know, would you give yours up? If you had a bunch of gold coins sitting under your mattress or in your safe, would you give them up if the government asked you to? I think most people, if they understand the history of what happens, and they understand that the currency's getting debased, inflation's out of control, why would you give up your gold?
What year did Roosevelt outlaw gold? Like
1933.
And so what I understand from some gold history is that gold mining stocks performed extremely well in that period. So even though there was no individual buyer, the central bank buyers gave a lot of demand to the mining business.
Yeah, Newmont was the big mining stock in those days, and it did really well.
So you've built a major gold mining companies before. How you're trying to do it again with Aris? How do you think you can serve people and help people escape this monetary reset with Aris and do something positive, building a new gold mining company?
Yeah, let me just give some background first, because I think it's important that people understand the nature of different types of investment in gold. And you have to be very careful with this, and I don't want to ever mislead anybody. To preserve your wealth, own physical gold, okay? And own it and don't sell it. That is going to maintain its value regardless of what happens to currencies or happens to everything else. If you want to make money, buy gold mining stocks. So buy the majors, and that's very safe companies, and have a portfolio of gold mining stocks in your portfolio. If you're trying to make a lot of money and you can accept the risk, because there's risk in this stuff, and I always like to say that, then you buy into a junior producer. And what we offer when we created Aris, or we've created the other three companies that preceded it, including Goldcorp, Endeavor, and Leah Gold, is we have a business plan. And we say, okay, we're going to build a major gold producer through a buy and build strategy. And we use our expertise in capital markets, our understanding of M&A, our understanding of how to create package debt financings. We do all of that, and we start usually with one operation, and over a period of 3 to 5 years, we try and build it to at least 1 million ounce a year producer. And why 1 million ounces a year? Because once you're a 1 million ounce a year producer, you're considered a senior mining company. And then you are in all the indices, your valuation multiple goes up. All these things that make it more and more valuable is you're an institutional quality stock. So that's always been our objective. And that's so Aris, which today trades at around a $200 million market cap. The objective has got two big projects that are going to go into production. On its account, it's about 10 million ounces of gold, of really good grade gold. And that's a great way to start a company. When they're both in production, they'll produce about, to our account, about 400,000, 500,000 ounces a year. So that's a great start, but that's definitely not where it's going to end. And we're always looking for the next acquisition or the next merger or the next project. And if you look back at some of the other companies, the valuations go into the billions once you get that up and running and have production.
Well, when Wheaton River, which you and Mr. Telfer co-founded and took from a shell to the world's largest gold mining company by market cap in 10 or 11 years, I read that the share price appreciated something like 4,000% in the first initial 5 or 6 year period, which is really incredible. But in the subsequent decade, large mining stocks have underperformed, especially broad markets, and have definitely lost their luster amongst investors. What is it about a small company like Aris that has an advantage over those large mining stocks to outperform and to give more potential value creation?
Well, because they're basically growth stocks. The major mining companies have been pretty stale in terms of growth. They're, especially since 2011, they've been very cautious about acquisitions and about capital investments. They've been playing a defensive game. So that's great if you want the safety of a defensive play, but if you want growth and you want value appreciation, you have to go with someone who's going to be very aggressive, have a very aggressive growth plan. And given that we have reached peak gold, we reached peak gold a long time ago. There hasn't been a major global world-class discovery since 1990. Okay, so it's over 30 years. The gold deposits are getting lower and lower grade. They're getting harder to find, harder to put into production. It takes 10 to 20 years to put a gold mine into production. And so if you want to grow in that environment, you have to acquire. And that's what we do best. We acquire. And that's how we're going to plan to grow this company through acquisition.
Well, could you tell me how much has the management and the inside group and the founders invested in Aris?
Close to 40 million. There's always some risk in when you're building something. So again, it's part of your portfolio. I wouldn't be like the Bitcoiners, say you have to put it all into this and you're going to be fabulously wealthy. That's pretty dumb investment advice. Everybody in their portfolio should have some portion of the portfolio that has risk looking for growth. And I think that this fits in that category.
You mentioned just about the experience of your father losing his wealth in hyperinflation in Argentina. If he had owned gold, would he have protected himself in that period?
Absolutely. If you look, Argentina went through a hyperinflationary period in the 70s and 80s. By the time he got his, he had a business. When we lived there, he had a business down there. He went through a long lawsuit to get his money out, and by the time he got his money, sometime in the 70s, late 70s, it was worthless. Absolutely, it was like wallpaper. It had no worth whatsoever. So he lost everything that he invested through hyperinflation.
What did it take for your family to persevere through that period of losing everything and starting over? How did you guys make it?
Well, to my father's credit, he had to work very hard and start over again. And it was hard, and we didn't have any. When we came to Canada, we had nothing. We lived in a small trailer on an island off the coast here where there was an iron ore mine that my father worked in. And, we didn't have toys or bicycles or, whatever money we scraped together was to buy clothes and buy food. And so it was tough.
So it sounds like in that time you had each other, and also your mother's cooking kept you guys together.
Oh yeah, we ate well. We didn't have a lot in terms of material things, but we ate well because we had a huge garden. My parents loved to garden, and they grew every vegetable you can possibly imagine. And so we ate well. She was a fabulous cook.
And with that, our formal conversation ended.
I'm hungry.
You're doing good. You're doing good.
I gotta make my pasta.
And Frank used the kitchen skills his mom taught him, and Domenica Fiore, the renowned olive oil he named after her, to cook the crew and I a delicious Italian dinner.
The Mediterranean diet has been around for thousands of years. It is considered the healthiest diet.
So Frank's bid to save you from what's coming: be defensive, preserve your capital, cash, real estate, and gold. Aris Gold. Thanks for watching.